Hi, I'm Ken McElroy. Welcome to Ken Flicks. Today I'm going to talk about why real estate. What are the advantages of real estate? Everybody knows kind of me as a real estate guy. I've been an entrepreneur my whole life, had multiple businesses, but I like real estate for a lot of reasons. And there's a reason why I'm doing it. It's not just because I fell into the business. It's been very, very strategic. So the topic of this one is, why real estate? And I think that you'll find when I show some of these very basic things, you'll agree with me. So I'm going to talk about this for a minute because cash flow is something that most people don't have. Most people have cash flow because it's their job. And typically that's their only cash flow, and it only works if they show up. So what we're talking about is much different. What we're talking about is investing in things that cash flow. That might be a business. You can actually make stocks cash flow. But generally we're talking about businesses, real estate, things that actually produce money that you invest in. And that money is cash flow. And what we're trying to do ultimately is we're trying to make that cash flow cover your expenses so that you're what we call financially free. So cash flow is a big, big piece. Another big piece that most people don't take advantage of when they're investing in commodities or stocks or things like that is what we call leverage. Now there's real power in leverage. Leverage comes from a bank. It can come from an insurance company. It can come from a pension. It can actually come from an individual. But leverage means a loan. It means debt. It means something along that line. So leverage is huge. And let me give an example. If I'm going to take $1 million and put it into the stock market, then now I have $1 million in the stock market. But I could also take that $1 million and I could buy a $5 million apartment building, for example, because I could get leverage from a bank in a form of a loan. Now that loan costs money, but it's a huge advantage because you're not going to get leverage on a stock portfolio. You're not going to get it on gold. You're not going to get that. So leverage is a huge piece of increasing your overall returns. And so that's why I like it. And you can, of course, also get this in business, which we've certainly done. Another one is appreciation. Now, I don't talk about appreciation very much because I think a lot of real estate professionals bank on appreciation. And I don't really believe that you should rely on it completely. I think that you should rely on cash flow and leverage and hopefully create appreciation. I call it forced appreciation. But what a lot of people do is they buy a house for $100,000 and they hope that it goes up to $110,000, $120,000, $150,000. Well, that's just a form of gambling. And that's just pure market timing, and that is usually luck. Appreciation can be done a lot of ways. It can be done by actually putting money into a property and creating value. So that's using leverage and cash flow and using investments to actually create appreciation. But it is a huge advantage to owning real estate. Another one, which kind of falls in line with leverage, is what we call refinance. Now what's interesting, and the funny part is most people think of refinancing as their individual home. And while that is usually the example I use, I say, have you ever refinanced your home? They say, yeah. And typically what they've done is they've taken that money out and they put a new pool in, or they bought a camper, or they bought a boat, or they bought another house, or they bought a boat, or something for their kids, or whatever it might be. It'd be what I would call not taking that money and investing back into assets. They usually invest into some kind of liability. But refinance is typically tax-free because you're replacing. These are just forms of debt. These are loans So when you actually refinance, you're actually paying off one loan and replacing it with another. So typically what we do is we invest in properties and we force appreciation. And when we force appreciation, that grows the value of the real estate. Then we go back to the bank and we try to refinance with more money so that we can pay off the original loan and then put that money in our pocket tax-free. So that's a huge advantage that you can do in real estate, but you can't do in a lot of other types of asset classes that you might be considering. Another one, which Tom Wheelwright, my good friend on tax, would talk a lot about, is depreciation. Now, what's interesting about depreciation is the IRS, the government tells us that everything that we have depreciates. So there's an actual scale that tells us how much depreciation write-off we can have each year. Now this is actually what we would call a non-operational expense. So after a property cash flows, we can actually apply a depreciation expense against the cash flow. So depreciation actually lowers your taxable income. So depreciation is an actual tool used by the government and the IRS. What they're trying to do is they're trying to direct you into things that they want you to invest in. So the reason real estate gets depreciation is because people need housing. The reason why they use depreciation for oil and gas is because they need oil and gas. So the IRS basically guides you to spots in the tax code and allows you these tax breaks. So what happens in our real estate investments is our real estate investments produce millions of dollars of cash flow, and we're able to wipe out a great deal of that through a depreciation expense and reduce our taxable income. So we pay less tax. The last one is what Garrett Sutton talks about, which is called asset protection. So when I talk about asset protection, for me, it's about insurance. So when I buy a piece of real estate, I buy insurance on it. And typically it's leveraged through the bank. But the cool part is, and I've had this happen, a place might burn. You know, in some of my properties in Texas, we've actually had hurricanes and tornadoes and hailstorms and things like that. So the insurance actually pays me to fix my property back up. And in the case of my hurricane in Houston, it took a little over 100 units in a 300-unit property. And what we actually built was brand new. So we have 200 units that were a little bit older and 100 units that were brand new. We actually got higher rent on the ones that were brand new because they had all brand new stuff in them. So asset protection is in the form of insurance. There's not very many other businesses or stocks or anything that can say that they have asset protection. So in that particular case, I even have rent loss covered because when I had my hurricane, the insurance actually paid for my rent loss, which they call business interruption during the time. So these are 6 very, very good reasons as to why I think real estate is very, very good for you and for your investors. So again, thank you for listening. I'm Ken McElroy.